For more on what to expect from retailers this week, we're joined by Deborah Weinswig, Coresight Research CEO.
Great.
Deb, good to see you. Thanks for being here. Can you hear us okay?
Perfect.
Okay, excellent. So talk to us about, are we going to continue to see this sort of differentiation between staples and discretionary, and how is that going to play out in the companies that we've yet to hear from?
Well, I think not only are we seeing a difference between the staples retailers and the discretionary retailers, we're also seeing a difference between the higher end and, let's say, the kind of opening price point, right? With Tapestry a few weeks ago talking about how they're seeing kind of no price resistance as they're raising prices. Yet we are definitely seeing, I would say, a bit of a trade down, as Walmart referred to it. So I think it definitely depends kind of what sector you're in. And if we look at kind of like a TJ Ross, Burlington, kind of that off price, there's certainly a lot of interest from the consumer there, foot traffic, and also conversion.
Okay, and so, I mean, we've already seen in terms of some of the retail sales data that's come through as well, Deb, that it's not looking great for some of the more specialty retailers, especially considering sporting goods, hobby, musical instrument, bookstores, month over month, they declined by about 3.3%. So what does that setup mean, even in terms of the month over month from March to April? How could that translate into their own earnings results that they saw too?
Yeah, I think specialty is definitely facing some challenges. I do think that if we look at some of these alternative revenue streams, I believe in March of 23 that Gap backed away from retail media and advertising services. And so this has been another kind of, revenue stream for the likes of Walmart, Target, Macy's, Kroger, Amazon, I think led the way. But these multi-brand retailers, I believe, are much better positioned because they are finding other revenue streams outside of kind of traditional retail. So whether it's data monetization, whether it's retail media, whether it's selling their IP, it's one of the reasons we've been so constructive on multi-brand retail. But it's a very, very important point that we would be in the, let's say, kind of outside of the masstige to luxury price range, like a Tapestry, is why we would be more concerned around, the specialty retailers right now.
I'm curious about department stores as well. I mean, we've been talking a little bit about Macy's and its 28% slump or something this year, and how they're going to fare in this environment when people are really sort of battening down the hatches.
I mean, I think that Macy's does deliver overall great value, and ultimately ends up being almost the same price as you would pay at a TJ Ross, Burlington. But it's, kind of coupon on top of deal on top of, right? There's a lack of transparency sometimes to the consumer. And so I do think that there continues to be an opportunity for them on the marketing side, and also kind of how they communicate to their customers and a loyalty program, et cetera. So I do think that they are challenged from that perspective. And also with some of the, I think we have to say it, right? The organized retail crime that, Target talked about last week. There are some retailers who are definitely having more of a challenge with that than others.
When we hear about mix shifts from some of the largest retailers in the U.S., like Target, like Walmart, how might those mix shifts show up in the earnings results that are still set to come forward this week, knowing that those mix shifts have actually meant consumers are perhaps just leaning more into the necessities that they need to purchase from those other retailers?
I think you're definitely continuing to see this kind of movement into more necessity. Some of the kind of government support was pulled back in the last quarter. I think we're starting to see that show up. And I think that, the consumers, while we're not necessarily, as it was said earlier, we're not necessarily in like a slowdown, I think everyone's just a bit more tepid. So, and we also have, right, kind of, if we look at goods and services, right, the consumers also kind of redirecting some of their discretionary spend towards services. And I think that in that environment that you either have to have kind of a really strong brand like a Tapestry, and the consumer is kind of trading up in some cases. But I think that when it comes to the necessities, that the consumer is watching what they spend. So kind of this frugality almost, right? They are treating themselves, right, to a trip, to a vacation, to whatnot. But when it comes to day-to-day spending, this is, I think, the key. They are definitely kind of counting their pennies and being a bit more careful. And where there are strong loyalty programs, where there's personalization, where there's customization, there are ways that we're seeing some of these retailers win. And some of the names, right? Target, Walmart, Kroger, they're really, I mean, they have, kind of in the show earlier, right? They have a lot of data on their consumer, right? They're just bigger retailers. I think they're able to do a much better job of delivering that customized experience, which I think is starting to show up in a bigger way in market share gains, but also gains in terms of where the consumer is spending their time, their money, and their mind share.
And then another story, another thread in all of the retail earnings is inventories, which now seem to be getting more right-sized, right? This is something our Shauna Smith wrote about that's on the Yahoo Finance platform. How does that position the retailers for the second half of the year with now inventories being more lean? Is that a good thing? Does it mean that they'll be able to weather things a little bit better?
I mean, to me, holiday 21 was on record the most profitable holiday season we've ever seen because inventories were so light. Retailers felt that they missed out on sales, so they went the other direction for holiday 22. We're still working down unbelievably some of that inventory, and there still is inventory, kind of that they haven't taken onto their books yet, right? That is sitting in factories, warehouses, kind of 3PL centers. So I do want to just be somewhat cautious. We are definitely in a much better position than we were, kind of for holiday 22. The stores will be more pleasant to shop. We won't see that very aggressive, kind of, I would say, kind of markdown cadence. So it won't be kind of this rush to the bottom. I think, we are seeing pricing power. I actually think that is one of the most important things, as we talk today, that's come out of this earnings season so far. And I think the positive is for 2H that we will see much cleaner inventory levels, which will be just a better experience. But also we won't see all this aggressive discounting that we saw last year. So I do think it's a positive. I just do want to be cautious that there are still higher inventory levels. It's just not on the retailers' books just yet.
To what extent does credit card spending right now and data that's been amassed, even by the New York Fed, signal that this is a consumer that's very much bracing for, and perhaps some of them already experiencing, the early moments of a recession?
It's interesting, kind of coming out of March 10th, SVB, many of us in the kind of retail consumer space were concerned about, the consumer. And, every additional data point, I would say, does make one a bit more cautious. But we continue to see spending, honestly, at a level higher than I would have expected, kind of in May of, 23. But I would say from a debt perspective, from some of where we're seeing the consumer pull back, I mean, there are definitely signs that that they are more cautious and that their kind of debt, kind of personal consumer debt is building. I would just say I think that we all need to kind of keep our eye in terms of one of more caution, but that, don't count this consumer out yet. They really have, I think, exceeded all expectations to date. And it does seem that, while we all continue to kind of debate, recession to recession, this consumer has definitely, continued to spend on goods and services at a higher level than many of us would have expected. And, not counting them out just yet.
Truth. Deborah Weinswig, thanks so much. Coresight Research CEO, thanks so much.